And the 17 number is, which section of a statement of financial position would include goodwill? There are four options: A, current assets, current liabilities, non-current assets, and D, non-current liabilities. And C option is correct because goodwill is included in the non-current asset. And 18 number is, at the end of financial year, Umar was owed $200 by a credit customer and he owed $10 for electricity. He also had a 2 years bank loan $5,000. In which section of Umar's statement of financial position will these items appear? And there are four options: A, B, C and D. B option will be correct because his credit customer is his current asset and unpaid electricity is current liability because this is accrued liability. Accrued expenses is current liability, and loan from bank is non-current liabilities because this loan is more than 1 year, and more than 1 year is non-current liability. And if the liability will be of 1 year, if we will pay it within 1 year, it will be current liability, and if we will pay it after 1 year, within 2, 3 or 4 years, this will be called non-current liability. So loan from bank will be non-current liability. And 19 number is, a club received subscription from members totaling $12,600 in the year ended 30th April 2019. The following information was available at 30th April 2018. Subscription paid in advance 1,300. It means we have the club received $1,300 subscription received in advance and subscription in arrears 800 at 30th April 2018. This 800 is included in the previous year. This will be subscription of the previous year. This will not included in current year's subscription. This is the income of the previous year. And at 30th April 2019, 1100, this is the current year's income, so it will be included in the current year's income. Which amount appeared in the income and expenditure account for subscriptions for the year ended 30th April 2019? And D option will be correct, that is 14,200. We will make the subscription account. This is subscription account, and club received the subscription $12,600 and plus received in advance in previous year. This subscription received from the members for the current year but received in the previous year, so it will be added in the subscription. 12,600 plus 1,300, this will be 13,900 less arrears of previous year related to the previous year. This 800 will be the income of previous year, so it will be deducted from the income, subscription income of the current year. So we will find 13,100 after deduction this 800 and plus arrears of current years. Accrued income, this will be accrued income. Receivable income, this will be receivable. It will be received in next year, but it is income of current year, so it will be added in the current year. This will be considered income of current year, so it will be added. 13,100 plus 1,100, we will find 14,200. And 20 number is a golf club sells refreshment to its members. Price of refreshments were owed $250 on 1st January 2018 and $400 on 31st December 2018. Payments to supplier during the year were 7,200. The inventory at the end of the year was $1,100, less than the inventory at the start of the year. In this statement, he is saying that if the ending inventory will be 100 less as compared to start of the year's inventory. So if the beginning inventory will be 500, then ending inventory will be 400, because 100 less will be ending inventory. So 500 less 100 will be 400. If ending inventory will be 800, then ending inventory will be 700, because 800 less 100 is equal to 700. What was the cost of sales of refreshment of the year ended 31st December 2018? And the correct option is D, 7,450. We will see in the working in the next slide. And we are seeing in working, there is a account of purchases. First we will make purchases account, and the balance, opening balance is 250 and closing balance is 400, and liability opening balance is always credit, and so it will be recorded on the credit side 250, and always also credit balance at the end of the particular period 400, and 7,200 is the payment to the supplier. And this is the purchases, balancing figure of purchases 7,350, 7,600 and 7,600 on both sides, debit and credit. And we will now calculate the cost of sales. Opening inventory 200, because we are taking closing inventory as 100, and opening inventory we are taking 200 as opening inventory, and closing inventory is 100 less than opening inventory. So if we will take opening inventory 200 less 100, and closing inventory will be 100. Opening inventory plus purchases, that is balancing figure 7,350, and total will be 7,550 less closing inventory, and the cost of sales is 7,450. That was the correct option. And 21st number is Mariam provided the following information: trade receivables at 1st January 2018 $5,000, and trade receivables at 31st December 2018 $3,500. Receipts from the credit customers in the year ended 31st December 2018 amounted to $47,500. What were the credit sales for year ended 31st December 2018? And the correct option is B, 46,000. How we will see in the next slide. This is sales ledger control account. The opening balance of account receivables are $5,000, balance BD on 1st January 2018, and receipts from the customers during the year is 47,500, and the closing balance was the closing balance of account receivables are 3500. That will be called closing balance CD on 31st December 2018, 35,000. And the credit sales will be 46,000, because if we will add both debit and credit, credit side will be exceed, that will be 51,000. We will take on both sides 51,000, and the balancing figure will be 46,000. That will be credit sales of the year. And 22 number is Sue started a business on 1st January 2019. The only accounting record she maintained was a bank account. Why is the balance on the bank account not equal to the profit for the year? She started business on 1st January 2019. The only accounting record she maintained was bank account. Why is the balance on the bank account not equal to the profit for the year? There are three reasons. Expense may be accrued at the year end. When she will not paid full expenses for the particular year, it means definitely it will be difference between bank account and the profit, because there is no profit and loss account. And second reason is goods may have been taken for personal use. If she will take goods for personal use, it means this will not recorded in the sales, so there will be difference between profit and the bank account. And number 3, non-current assets may have depreciated. So if she will non-current assets depreciation, this will be difference between profit and the bank account. So these three reasons will be accepted, because these three reasons can be difference between bank account and the profit for the year. And 23rd number is a limited company provided the following information. 1st January ordinary shares of $1 each, 200,000, and retained earning, opening retained earning on 1st January 12,000, opening retained earning at the beginning of the year, and the end of the year 31st December. Profit for the year was 43,000, and transfer to the general reserves from this profit 10,000. A dividend of 10% on ordinary shares was paid during the years. What was the retained earning on 31st December 2000? Retained earning at the end of the year, and the C option will be correct, that is 25,000. How we will see in the working in the next slide. Retained earning at the beginning of the year 12,000 plus profit for the year is 43,000. Total will be 55,000. Transfer to the general reserves 10,000. When we will deduct 10,000 from 55,000, it will be 45,000, and less dividend paid 10% on ordinary shares 20,000. When we will deduct 20,000 from 45,000, it will be 25,000. That is the correct option of retained earning at the end of the year.